Hi, this is Anthony with TradingETFs.com. Today is June 7th, 2020, and here is a new trading idea. This one is the symbol TBT, which is it's an inverse bond ETF. And what that means is that we're betting that interest rates are going to rise, and so this ETF here will move in the inverse relationship to bonds. So it's really no different than any other ETF or stock that we look to buy. We have a cross above the zero line here just a day ago, and you can go back to this time frame here back in March, and interest rates ended up going up, and so therefore the TBT ETF went up in value from about 1460 up to about 21. So that was about a 7-point move, and then you can see obviously it sold off. But the reason I'm highlighting this is because you can notice that our oscillator at the time was negative. And so it actually continued to go down until it bottomed here back on March 16th. So the fact that it can move 6 or 7 points when the oscillator is below the zero line, then I would expect that now that the oscillator is above the zero line, we can get this move from about, let's say, 1760, which is where it closed on Friday, all the way up to about 22, and that would be about a 24% move. So that's a pretty good move for a bond ETF, although it's a little bit more volatile, so there is a little bit more patience here. Now, you guys know also that we get a cross above the zero line. We then oftentimes see a counter trend move. So counter trend meaning we may see a pullback in price, and that would be the time to jump all over this with the expectation that when it turns, it'll start moving towards this 200-day moving average. When I move the oscillator to on top of the price chart, then you can see it's very similar to some of our other ideas, is that the oscillator, even though price has been going sideways for the last 3 months, our oscillator has been going from an extreme negative to less negative, less negative, less negative, and then all of a sudden we get a cross above the zero line for positive momentum. So again, we're looking possibly for this to pull back, and then that would be the time to definitely buy. You can also, I mean, really it comes down to how much risk you want to take on a trade. So let's say that we open up tomorrow at the same price, and you happen to buy the ETF. Then as long as you withhold during the pullback, then we would expect to see a turn back to the upside and hit the price target. Or if you decided not to buy it and you waited to see if you got a pullback, and if we did get a pullback, then you got a better price. If we don't get a pullback, then you're going to miss out on a move to the upside. So what I've suggested here is there's downside risk if you had a stop loss at, let's say, 1630. Stop loss means that you set it up with your broker so that if price goes below 1630, you automatically will get sold on the next price. And that way you would have a loss of about 7% or so, but you got out of the position. As long as price stayed above the 1630 level, then you're still in the trade, and if it turns right back around and goes higher, then you didn't, get out of the position. In today's environment, because the markets move so much in such a short period of time, there is risk that we could get a reversal to the downside. And so you want to have this stop loss in to protect you from having much bigger losses. So again, our expectation is that we're going to move up to the target. which would be roughly $22, and that'd be a pretty good trade. If you have any questions, certainly let us know. And I think that's about it for right now. Thanks for your time. Thanks for your support. Have a great day and stay safe. We also have 2 other videos coming up here shortly, so look out for those as well. Thanks.